Watching the India Market Open, I'm Tamanna Inamdar. With me is Neeraj Shah, and we want to welcome you to NDTV Profit and India Market Open. Before we get to the show, just a few seconds on what we're all about. NDTV Profit has the promise of giving you the right information so that you can make the decisions you need to build your future, to make the financial decisions which take you to a better life. That's our biggest promise. Neeraj?
Most certainly, we are in a new avatar and we are happy to showcase the immense unlimited opportunities that India offers, from manufacturing to markets to everything that goes into building the economy. It is growth and profit. And what better timing, Tamanna, than the buoyancy and optimism that we have thus far exhibited in Indian markets, more so in the last few days. And therefore, I say it's just a confluence of events and a confluence of factors that have led to us being on television at this day, at this moment.
It's a magic moment. What a day to choose to, and what a time to choose to launch a new business offering when markets are believing and displaying a kind of strength and optimism that we haven't seen in decades in India. Now the question is, how do you navigate this territory? And that's what we're going to talk about. It's a big day as far as news is concerned. There's MPC as well. We have an eye on it, and of course very special programming as we have our launch event later in the day. But let's begin with what you need to know to begin your trading day and to set your trading day. So let's start with the global news flow and what happened there. So not a lot of factors globally, but good to quickly check what we should keep an eye on. So Wall Street pretty much snapped a 3-day losing streak overnight, and you saw some kind of positivity there led by mega tech stocks. So Alphabet, for example, the Google parent, gained 5% on launch because they have this new Gemini AI model. Nvidia was the other big winner of the day. The yields are looking good. They rose up slightly, 2 to 3 basis points based on jobs data, but yields are looking good. So the 10-year treasury is fine. Crude continues to be soft and largely on fears of a weak China economy. But all eyes are on data which comes on Friday. That's the non-farm payroll data. What the street is looking for is to gauge how strong the US economy is. Is it receding but not going into a negative territory, the Goldilocks zone? So that's going to be the big set of plays. But overall, I would say the story is domestic today, Neeraj.
Yeah, it has been for a while, isn't it? The last few days, the global markets may have done what they have done, but our markets have danced to their own tune. So, but you know, we've done a large portion of the heavy lifting. The markets have done that, right? The near 1,000-point move that we've had. So that is out of the way, and very likely that at least for the short term today, like the next hour and a half of trade, or the first hour of trade, sideways move is very, very likely until the MPC decision. More importantly, the MPC commentary is out of the way. So I think that is the first trigger. And then we have this non-farm payroll data as well as the Fed decision come Wednesday. So I think lots hinging on the global factors now that the local factors have been digested. But I tell you what, it was very interesting to see VIX come off so rapidly in the session yesterday. Nearly 8, circa 8%, 7.7% downtick in volatility in trade yesterday. Does it show that the markets are confident about events? Because remember, we saw this pull back on an equity market perspective ahead of the election verdict as well. And as I always love to say, and we've been saying it here for the last few days, Mr. Market knows it best. So, you know, it'll be interesting to see what happens. From a levels perspective, just the options data as it is suggesting for the bank nifty, because banks have been quiet the last couple of days, 47,500 seems to be that key resistance level based on the options data that we've seen. So let's wait and watch if the bank nifty, if it recovers, if it does post MPC, does it kind of break this hurdle or does it not? So that's the other thing. And I was talking to dealing desk, I was looking at the spaces that move as well, Tamanna. Somehow power seems to be in the thick of action. We've seen yesterday what's happened to some of the individual stock movers. We've seen the last 1 month, even the power ancillaries do so well. You know, the Inox Winds, the Suzlons of the world, they've had a really good run. The question is, can they do more? If you just look at, just the yesterday's movers, for example, and this is not delivery data, but just the price and the volume data that we saw. from amongst the liquid names on which derivative action can be taken. Look at this, Tata Power 10% higher, volumes nearly 2.7 times the averages. IEX, another power exchange, 7% higher, 2.7 times the volumes. So pretty strong moves there in power. And then individual pockets. You know, we were talking day before yesterday about what the Paytm action could mean for some of the other NBFCs. It showed in AB Capital with the kind of fall that had. And sugar is in the thick of things really, with all the news flow surrounding ethanol, etc. Balrampur Chini, 7% down. The day before yesterday, 5% down yesterday. So that too is showing some chinks in the armor. So usual news flow, but from amongst what dealing rooms are saying, a sector that everybody's watching out for, power.
Power, and especially those who are strong in the renewable space, I would say, on the bet of continuity in government in 2024, that there will be enough spend, push and incentive for renewables. So we have also put together a list of stocks that could react together today to news flow, and we'll take you through that. But just a quick word on what FIIs have been doing, because you had a bit of a breather in the rally of Indian markets yesterday. So who sold what? So FPIs sold about 1,500 odd crores and DIIs sold close to 10 crores, so not too much from the DIIs. There's an interesting Chris Wood's note today, and I just want to refer to it quickly to give you a sense of what that mood is. A lot of what's going to happen in the markets now, and some of it, fair bit of it, hinges on the FII numbers that are coming. And Chris Wood says, greed and fear will adjust the Asia-Pacific ex-Japan relative return portfolio, in part for recent market action, to maintain the overweight in India and neutral in China. So that's important. Overweight in India and neutral in China. The weighting in India will be increased by 1 percentage point, while the weighting in China will be reduced by 1 percentage point. So that is the sort of big picture. But what are the stocks that we have our eye on today? So on an MPC day, typically you look at rate sensitive stocks. So you have your finance, your housing finance, your banks, auto, all of that pack. But remember, we're expecting largely another pause. So you might not see too much action there unless there is very specific commentary coming in from the RBI governor. Neeraj spoke about sugar. That's an important one. Apart from Balrampur Chini, I would say Sri Renuka, Triveni Engineering, Gulshan Polyols, all of those to watch out for. And why is that? Because the government clarified yesterday that it does not want ethanol manufacturing to from sugarcane juice, but they're okay with B-grade molasses. So that might be a bit of a relief actually for the sugar pack. So I would watch out for that. Apart from that, I think Zomato, definitely one of those stocks which will respond to news. SoftBank Group affiliate will be selling 93.6 million shares in Zomato at 120.5 a piece. I would also keep an eye on 197. Paytm took quite a bit of knock yesterday in trade because their management has said they're going to reduce their focus on sub 50,000 rupee loans. So you saw about an 18% drop yesterday. Do you see a recovery today, or is there more pain left to see? I think those are some of the stocks on my list. Neeraj, what about you?
Yeah, so, Zomato would be interesting if the deal gets consumed very easy, or rather subscribed to very, very easly. You never know, the stock could actually do well because, the pricing is just right there at the current market price. Five-Star Business Finance is the other one, wherein, versus the current market price of 755 odd, three holders offering to sell about 25.7 million shares at 730. So that should be watched out for. Not a very large order win for Olectra Greentech, but remember, their targets, as well as the order book that they are sitting on is pretty healthy. So can this order win spur a little bit more for Olectra Greentech? I think that's the other thing to watch out for. But 40 electric buses, 62 crores, just a small patch in an otherwise very large order book. Maybe it moves the needle on the stock, maybe it doesn't, so watch out for that. IIFL Securities, the stock had gotten hammered when this decision had come about, when SEBI had put out an order prohibiting the company from onboarding new clients for a period of 2 years. Now, SAT has set aside SEBI's order. The stock was at 75 and it's already at 120, or 117. So the capital market players have done really well in the recent past, but maybe this is a further shot in the arm. So if it reacts, you know why it is reacting. And some heavy movers have moved into the short-term ASM framework. 3 units from the Adani Groups, Adani Energy Solutions, Adani Green Energy, and NDTV the three of them on the short-term ASM framework, and TV18 broadcast as well in the short-term ASM framework. So watch out for those stocks. The standard disclosure, of course, Adani Group owns NDTV, and you're watching NDTV Profit. So those are a few stocks that you got to keep an eye out for. Must say, just before we wrap up this stock list, there are multiple notes that have come in on banks, primarily because of some commentaries that the banks have given and some research that the brokerage houses have done as well. And some moderation in growth, some moderation in net interest margins anticipated for some of the banks. But the key highlight, Tamanna, that as I saw it in the notes the last 2 days, the people are saying that yes, NIM contraction is very likely, but even the contracted number would be a new normal, which is higher than the previous past. So therefore, our bank and the valuations pricing that in already, and is the FI money giving us a cue that maybe 2024 could be the year of the large caps and the mega caps, and some of them, or a lot of them, belong to the banking space.
Just to flesh that out, the point that Neeraj made, a quick word on this Macquarie note this morning on India banks, where they say loan growth will moderate across the system. So that's important. Credit costs to increase as recoveries decline. Capital levels are adequate for large private banks. Don't see any equity fundraise in the near term. That's important as well. And they're also saying margins possibly could come down by 10 to 15 bips in case RBI cuts rates by 50 basis points in the second half of FY